Good afternoon. Today we will present Chapter 10 and Chapter 11 of our integrative project, Botas el Jefe. Our team is conformed by Carlos, Juan Antonio, Elisa, Lorena, Michell, and me, Daisy. So for Chapter 10, financing plan and project evaluation. So first off, we will mention budget, investment, work capital, cost, and expenses. It is important to mention that investing ensures present and future long-term financial security for the company. These investments will provide our financial security and income. Since Botas el Jefe is a company that is already established, they already count with the machines necessary for our boots repair. So we will be going to invest in what is our work capital and administrative expenses. So in the following chart, I will mention some of these. So for our the current assets that Botas el Jefe has is what they already have, or the things that they already have. So it's 108,568 with 31 cents. For current liabilities, which is the things that they still owe or the debts that they have, it's 43,427 with 32 cents. And for the work capital, which basically is the capital that they have to spend and the money that they can actually work with in order to produce or to just repair the boots, is 65,140 with 99 cents. Next, please. So some of the costs that we have are, as I mentioned, administrative costs that I will mention in the following chart. So here, as you can see, we have the investments and values, and I will be mentioning the annual amounts that they have. So for the selling expenses, which is basically the cost of selling or repairing the boots, is 46,295 with 99 cents. Administrative expenses, which is basically the staff, employees, and the computers that they use, or everything that has to do with all of that. It's 48,000, and the sum of this is 94,295 with 99 cents. And also for our accounts receivable, for a total of 1 year, it's 351,165 with 67 cents. And these are just basically things that the company will be in some way getting back. It could be such thing as credit cards and other resources.
Production cost. To meet the demand, it is necessary to keep the balance of the amount of raw material that is intended to be used, and with this obtain the total capital that is necessary to use to cover the demand and the cost of processing. The chart indicates that the reparation cost of approximately 50 pairs of boots monthly is of 4,200 pesos in raw material. Next, please. Another administration expenses that we have. First, administrative expenses are part of the entire process of producing a product, and in this case, like it is a family business, like administrative expenses, we have just the payment of the manager, who is in charge of to take the control of the employees, production, etc. and which payment is of 4,000 pesos monthly. Next.
Well, and then we have the selling expenses budget. The sales expenses that are contemplated in the case of the company El Jefe are the two salesmen who are in charge of the customer service, receiving the merchandise, as well as giving the order on time. Well, it's important to mention that their salary, their weekly pay is 1,190 pesos, but only 40% of the total was taken into account, since the other 60% of their salary comes from the production and sale of goods. Well, on the other hand, some stationary expenses were also considered, such as some nuts that are delivered to clients. Next one, please.
The debt and amortization tables and support for entrepreneurs. For the depreciation of the machinery and equipment for the machinery is a rate of 10%, and it represents 5 years. And for the manual tools, it is a rate of 5%, and it represents 10 years of depreciation. The total amount of the depreciation is 21,750 Mexican pesos. And it is the same for the amortization, which shows the loss of the value of the machinery and the equipment. Next, please.
Well, and then we have the net present value, which is a method. It is one of the best methods for evaluating long-term investment projects, because it allows to know better if the investment will be maximized or not. It is a measure of the benefit that an investment will have in its useful life. In this case, we have the net present value of 555,000 pesos, which is a positive value and means that the project should be accepted. If the net present value was 0 or a negative number, it wouldn't be accepted because it wouldn't be rentable. We have the minimum rate of discount, which in this case is 10%. It is the minimum rate of discount means that is the minimum rate of return of an investment. It reflects the lost opportunity to invest in the present. Then we have the internal rate of return, which is the percentage of profit or loss that an investment will have for the amounts that have not been withdrawn from the project. In this case, we have 151%, which is a really, really good percentage. Then we have here, if the internal rate of return is higher than the minimum discount rate, that in this case is 10%, it means that the project is highly rentable. If it is equal to the minimum discount rate, it may be possible to keep on with the project, but it is not recommendable. And if the internal rate of return is less than the minimum discount rate, the project should be disposed. And then we have the payback time. The payback time is an indicator that measures how long the total investment will be covered at the present value. It can be really easy done with a formula with two values. With the first value, we have the immediate year of the investment, which is 1, the first year. With B, we have initial investment, that in this case is 55,000. Then the accumulated cash flow of the immediate previous year, which is 70,000. And the cash flow of the year the investment is recovered, which is the year number 2, and is 111,000 pesos. We're gonna do it with this formula, and what we had is that we will need 0.954 years to get the investment back, or traduced to months, it will be 11.4 months.
Well, the next topic is the statement of the financial situation balance sheet. So here we have the document. This document reflects the financial situation of an economy entity. What I mean with this? So I mean that it's a structure that is made up of dates like the asset, the liability, and equity, and the stockholders' equity. As you can see in the table that is shown, so we can see in a very explicit way that it's possible to have an understanding when looking at it with a total of liability capital margin of 331 488 pesos. So as I mentioned before, this chart is made of the asset, as you can see in the part left, and also it is made of the liability, the fixed asset, the deferred asset, and the capital. So in a little words, this sheet means how the company is. We can conclude that if the company is gonna be uh, successful, or if we have to do something else to be successful. Next, please. Well, in the next slide, we have the project statement of income. So this is also called that profit or loss. So as we can see, this the profits and losses are a financial report that, based on a specific period, shows in a detailed way the income obtained and the expenses at the time that they occur, and as a consequence, the profit or loss that the company has generated in a set period. So as you can see in the chart, we have the period that is year 1, year 2, year 3, year 4, and year 5. This we have the concept, the sales, the operation profit, financial expenses, net profit, before tax, etc., etc. But this is given as a result if the net utility of each year. For example, in the year 1, we have an utility of 483 pesos, and this is gonna be increasing according to the next 5 years. So next. So in the next slide, we have the cost benefit. What I mean with this, we have that the cost benefit ratio is a financial tool, so that compares the cost of a product versus the benefit that the product provides to effectively evaluate the best decision to make in terms of purchase. So the cost benefit analysis of a project, for example, it is constituted by a set of procedures that provide the profitability measures of the project by comparing the expected cost with the expected benefits when carried out. So in this chart, we can see the expected cost and the expected benefits for the project, and we can make a conclusion what is the cost of the product and what are going to be the benefits of this product, and we can have a decision for before carrying out the project, and we can make the changes that it can be necessary. Next.
Well, and then we have the break-even analysis. Well, first of all, the break-even analysis indicates how much will be needed to cover expenses before a profit can be made. Well, then, as we can see in the present chart, the break-even percentage is high with 82% and during the first year, and with a total of 235 units. And however, by the fifth year, we have 50%, and with a necessary of units of 316. I'm sorry. Next one, please.
For the investment plan, Botas el Jefe intends to initially invest without the need of with a financing and with its own capital. The quantity of 65,140. The reason because the company doesn't need a financing is because they already produce and sell goods, and they can cover the quantity for the new service. Next, please.
Well, and then we have the financial needs. As it was said before, the company does not present financial expenses. And since the company does not need financing from third parties, which does not generate debts or obligations.
Well, it is important to mention the annual cost of the company. As for example of this, we can have the cost of the material and the input. We have that the company would sell jefe since the first years of sales, it is having a total of monthly cost of 4,200 pesos. This is talking about the raw material for to make the service of the repair of the boots. So next to we have to add the a cost of 2,750 pesos. This is talking about the packaging of the boots. So after both these costs, we have a total of 6,950 pesos, which is the represented variable cost. This is possible. It is factible for the capital that the company has at the moment. So we don't need a financial credit, etc. Next.
Well, and then we have the financial plan. As long as the company has the enough capital to start with this project, there's no such thing as a financial plan in this project for this business unit. There's possibility for opening financing in case of needing it, and we made a plan in case that it will be needed. It will be a Banamex credit that can go from 50,000 pesos to 15 million pesos. And these are some of the requirements that the company already complies. Some examples are business age of 4 years old, proof of fiscal situation, and some guarantees that might be requested as a material guarantee.
So in conclusion, after taking into consideration the investment plan, we can say that the project for the boot repair is really factible, so it can be done. The company does count with enough funds to make this happen, but if it were necessary, the company would be able to get a loan from the bank. And that is it from us. Thank you.